In today's video, I will share a very interesting Awesome Oscillator strategy with you. It is a strategy that is unconventional because most people don't use Awesome Oscillator this way, and they don't use this combination of entry and exit strategy either. And in my opinion, the basic use of the Awesome Oscillator is bullshit, and I don't really understand why people use it that way, because that doesn't seem to work. But with this combination, when I combine the awesome oscillator crossover and an exponential moving average crossover with a time filter, it works very good, and I tested it for 2 years with 99.9% tick data, with variable spread and slippage that I will show you at the end of the video with all the trades it took. So it will be really interesting because I will show you the visualization of the trades and everything. Now let's start. The Awesome Oscillator is an indicator used to measure the market momentum. The Awesome Oscillator calculates the difference between the 34 period and the 5 period simple moving average. Now, the interesting part is that it is not calculated using the close price, but it is calculated on each bar's midpoints. So it is a pretty simple indicator, as you see. Here is the equation of the indicator if you are interested, because I always recommend to take a look at the equation of the indicators, play around with it. You can also modify it if you want, but learn what they are, because that way you will have a much easier time to actually implement the indicators to your strategy. This strategy has approximately 1 to 2 risk to reward ratio, and the largest winning trade was more than 5 times as the largest loss trade, and it is combined with a very good win rate. So the strategy really works. And now I show you the example trades for a buy and sell trade, and then I will show you all the trades in MT4's strategy tester, but not with the default tick data and stuff, because that is bullshit. But I will show it with 99.9% tick data with variable spread and slippage to create a real environment for the backtest. It is the highest quality backtest that can be done, and I do this with all my EAs and strategies to actually see what are the results. It is really important to know that most strategies, when you test it in MT4 or MT5 strategy tester, you test it with low quality tick data, and this is why they are not reliable than on live accounts. But if you are using 99.9% tick data with variable spread and slippage, you will see the difference and how much more difficult it is to create a successful strategy that actually works. But if you test with high quality tick data like I do, at least you know that the strategy is really working. So in my opinion, it just really worth the effort and all the coding and all the all things that you put in to actually make it work. Let's see the buy example and sell examples. So this strategy is really simple. First, I will show you a buy trade example in TradingView. The strategy uses only the Awesome Oscillator for the buy entry rules and for the sell entry rules as well. And it is using exponential moving averages to the dynamic exit strategy. I have to tell you that the exit strategy is just as important than the exit strategy, because you can have a great entry, but if you don't have a great exit, you fail. And you can have a pretty bad entry, but with a good exit strategy, you will still making money. And that is the key. And that's what differentiate all the profitable traders from the losing traders: the exit strategy and the psychology of trading. That's why I don't just use stop loss and take profit and that's all. Of course, a safety stop loss is required, but it is not enough. So let's see. Here is the EUUSD 1 hour chart, and we will be using an Awesome Oscillator, and we will take a buy trade when the Awesome Oscillator's value crosses below 0.0, so basically the zero line. And as you can see there, it just did that, so we took a buy position, and it turned out to be a really good trade. And this is so interesting to me because most of the time I don't use one single indicator strategies, but this time when I tested it, actually it seemed to really work well with the exponential moving average exit strategy, and I will use this combination in the future and make some more interesting strategies with it too. So I highly recommend to try it out, the Awesome Oscillator plus EMA combination. So then we have our exit strategy. Let's see. As you already see, we exit the trade there, and it is really important to note first that we have 3 conditions. The first condition is that you have to wait 1,500 minutes after the entry of the trade to close to actually be able to close the trade. It is a time filter, an X minutes time filter that helped me, and it actually works. And if you add this to your strategies, it will reduce your losses, and it will increase your profitability by tens of percents. So I highly recommend it. So basically, what does it mean? It means that before you can actually look for the dynamic exit parameters, so the EMA cross that I will tell you, before that you should wait 1,500 minutes, and you can't do anything with the trade. And the only way that the trade can be closed before that time is the safety stop loss that will be 96 pips, and that is really important. Other than that, you can't close the trade. It is a strict rule to the strategy. And the exit strategy is that when a 22 period exponential moving average crosses below a 122 period exponential moving average, then you can close the trade if the 1,500 minutes has already passed. Before that, you can close it even if the crossover happens. Really important. And I hope you understand this whole strategy. I tell the rules one more time. Basically, we enter the markets when the Awesome Oscillator crosses below 0. Then we can exit the markets if 1,500 minutes has passed, or if the safety stop loss gets hit, that is 96 pips, and we can close the trade if the 22 EMA crosses below the 122 EMA. This is our buy trade setup. Now let's see the sell trades. So the sell trades are really similar to the buy trade setup, and I don't want to waste your time, so let's just jump right into it. We will have an Awesome Oscillator, of course, for the entry rules, and for the exit rules we will have an EMA crossover. The numbers are entirely different because here on this channel I always tell that when you are using an asymmetrical strategy, you are so much ahead of the competition, and you are not that predictable if you are using a completely symmetrical strategy. So in other words, if you are using the same numbers but just different crosses on the buy entry or sell entry or buy exit and sell exit rules. Here I always separately test and code the buy and sell entry and exit rules, and this way it is much better, and it is proven by thousands of tests and real-time trading. So let's just start. The Awesome Oscillator has to cross above 0.001 to actually enter the market with a sell trade. As you see it here, it just did that at that at that right moment, and so we could enter with a sell trade. It is pretty simple, so I don't have to um, tell any more information about that. Let's see what is the exit strategy, because as I said before, this combination is really good, and the exit strategy is based on three conditions as well. The first condition is the same, x minutes after entry parameter, that is 1500 minutes here as well. The stop loss is 96 pips as well, but the EMA exit strategy is quite a bit different. Not that much, because I tested it, and with this strategy the optimal numbers were pretty similar, but here when the 17 EMA crosses above the 100 EMA, we can close our sell trade, but just if the 1500 minutes passed. Now, as you see, it is pretty interesting that I didn't say that when the EMA crosses below the 17 EMA crosses below the 100 EMA, because we are using an asymmetrical strategy, and the numbers are not the same as well. So it is an interesting fact that based on all the testing, it is not always the case, and you should look it up yourself and try it out and analyze it. Don't, believe me blindly. I highly encourage anyone to analyze the markets and test, because that is the way to learn, and see yourself that when you are using kind of different numbers and different that like not the obvious things to not the obvious crossovers to buy and sell trades, and treat them separately, you have much better results, because buy and sell trades have different personalities and sentiments in the markets. And so I will tell you the sell, entry and exit rules again. So you enter the markets when the Awesome Oscillator crosses above 0.001, and you exit the markets if 1500 minutes passed, and or if the 96 pip stop loss gets triggered, and if the EMA, that is 17 period, crosses above the EMA, that is 100 period. This is our setup. If you have any questions, just ask in the comments, and I will show you the whole test with visualization for more than 2 years on this strategy, with the highest quality data, with variable spread and slippage. And now let's see it. So first I show you the visualization of the strategy, and then I will show you the statistics. As you see, it does every kind of trades, but the most important part for me is that when it is a losing trade, it cuts the losses quickly, but when it is a winning trade, it let the winners run. And it is what every hedge fund manager would say to trade, how to trade. So when there is a loss, most people tend to do the following. They move their stop loss to lower levels, so in a more negative direction, because they think, because of human psychology, that it will come back again and they will win. But the markets doesn't really work that way, and most people blow their entire account. This is why you shouldn't move your stop loss, and you should use more than 1 to 2 risk to reward ratio, or at least 1 to 2 risk to reward ratio. If you are using scalpers that uses insanely bad risk to reward ratios, then even if you are using a 1 to 1 risk to reward ratio, that will be a huge difference in your trading. Believe me, it is all based on statistics, and it is just how it works. So as you see the statistics and all the trades, our average profit trade is much bigger than our average loss trade, and our largest profit trade is much bigger than our largest loss trade. That is what we are looking for. And even with that, we have a pretty low drawdown, and we have a basically insanely good win rate to this risk to reward ratio. With this risk to reward ratio combined with the largest profitable trade being that much bigger than the largest loss trade, this risk to reward ratio combined with all the other data is better than a 99.5% win rate with a scalper. And you can calculate it on a paper easily, and you will see it. Now, I hope you enjoyed this video, and if you want more videos like this with the Awesome Oscillator and with different kind of interesting entry and exit indicator combinations, just tell me in the comments and subscribe, and have a good trading. Ciao.